REITs followed up their historic second quarter with an impressive encore. In the third quarter, the FTSE NAREIT All-REIT Index posted its best ever quarterly gain since the index's inception in 1972. I'm here with NAREIT Vice President of Research and Investor Outreach, Brad Case. And Brad, what stood out for you in the third quarter performance?
Yeah, the third quarter was a very important phase of the market for REIT investors. You know, after going up 27.5% during the second quarter of this year, a lot of REIT investors may have wondered whether there was still upside room. So they followed that up with 31.5% gain in the second quarter. The REITs are actually now up about 97% from where they were at the market trough in early March of this year. So it's been a very strong quarter, but it's been a quarter that really REIT investors have been looking forward to the opportunities that REITs are going to have over the next several years. Really taking a very positive view of REIT investment earnings potential going forward.
The REIT rebound has been closely linked to the wave of secondary offerings we've seen in 2009. But more recently, we're starting to see some activity in the unsecured debt market. How viable is this market and what's driving it?
Yeah, I think what's driving it, there's been a great deal of activity on the debt side of the market now. REITs have issued more than $6.6 billion of new debt so far this year. That's on top of $23.6 billion of equity in both IPOs and secondary equity offerings. So the REIT industry has been recapitalized to the tune of more than $30 billion so far in this year. I think what's happened is that investors now have confidence in the ability of REITs going forward. Number one, to make good acquisitions when those acquisitions become available over the next few years. There are going to be tremendous opportunities to buy high-quality real estate assets at very good prices, and so investors on both the equity side and now on the debt side want to put themselves in a position to benefit from that. And the other is that they have confidence not just that the REITs have those opportunities for growth and for profitable investments, but also that they are not going to run into the kind of liquidity crisis that hit the REIT industry a year ago and back in the beginning of this year. That was part of the REIT downturn, and that liquidity crisis for REITs is really over. And so that has brought confidence back to people, to investors who look to invest in debt of REITs as well as equity shares of REITs.
Coming off two record-breaking quarters, should investors be concerned at all that REITs are at or above full value?
Well, I don't think there's a lot of reason for concern about that for a couple of reasons. The first is that although REITs, as I mentioned, are up about 97% since their market trough, the downturn in the REIT industry was so severe. They're still down about 50% from the peak that they reached in January of 2007. So that means that there's still a great deal of room for recovery back to the levels that REIT stocks were trading at before this downturn started. And the other is that the room for improvement in commercial property investments is very strong going forward. And so investors are not looking at the value of the REIT portfolios right now, because that's still very strongly affected by the state of the overall economy. REIT investors typically look forward a year to a year and a half to what they think is going to be happening to commercial property values in the future. And it's not that commercial property values will necessarily have recovered by then, but that's when the REITs will be in their strongest position for acquiring assets at very good prices.
Thanks, Brad. For REIT.com, I'm Matt Bishar.